usually talk about bringing this back to the beginning of the year as long as we've got the reasonableness to do so, meaning that we've got the elections made for your business. We're going to say that we're acting as a board for this year. Going back and making sure that you're up to date with the distributions of payments on that rental, and if you haven't, want to make sure that that's getting addressed, because it can get a little overwhelming if you have to update all of your paperwork for an entire year. It's a lot easier to be a little proactive and kind of catch up now, roll out the rest of the year, but definitely using the Augusta rule, because that is a huge benefit. I mean, on average, we're talking $15,000 to $19,000 in tax-free deductions. That's income coming over to you as a business owner just for renting your house for your business.
I know you're dancing, walking a fine line there with talking about the Augusta rule. We're in August, right?
Yeah.
If the Augusta rule or that strategy is part of your tax plan, I mean, you still got plenty of time. You're talking about maybe going back and applying some meetings that were held earlier this year to try to really maximize it. But if it's part of your plan, you've still got time.
You've still got time.
You've still got plenty of time. Okay, we've got some questions starting to come in through the chat window here. It says, does TaxHive file extensions for their clients, and is there a time period on how far you can go back? So the first answer is yes, we do typically file extensions for our clients. If you are working with an account manager here, they can give you an update on whether or not an extension was filed for you. How far can you go back? I would say just get with your account manager and have them take a look at what needs to be done. If you're talking about an extension for prior years, the extension deadline was March 15th this year. But if you're talking about getting taxes filed for prior years, we've seen some things that are pretty crazy. Clients going back to like 2004 that haven't filed taxes, we can go in and help out. Obviously, you can't do extensions for those, but we can help you out with that tax prep. Where can I find the 1,400 tax deductions? Is it irs.gov? The full tax code is listed on irs.gov. As far as the tax deductions and things that we look at, we use a couple of different things, but where can you find the full list of the 1,400 tax deductions?
I'm not sure what we mean by the 1,400 tax deductions. Is it, are we talking about the tax code there?
There isn't necessarily just a list of, right? The tax code is written as, if this scenario fits, this is deductible, yes or no.
Right.
From that, the tools that we use to help us create and analyze a tax plan, look for opportunities for deductions or deferments. There isn't going to be a list of 1,400 tax deductions.
Yeah, so I mean, there is a list of like qualified business deductions, but really it's not a list, but it's more of a qualifier. If we're talking about that, it's I think it's 167 that you can go through. It gives you some criteria about what is a deductible expense for your business, if that's what we're talking about. But then you've also got some individual deductions that it's referred to as your itemized. What can you personally on your 1040 deduct out on your Schedule A? So IRS Gov is a great tool. It's a little wordy, so if you want to read some legalese about taxes.
There's a lot of blogs out there. I'd be careful with ChatGPT. AI tools are usually a little outdated in their numbers. A lot of the principles and concepts are on, but they'll give you 2023 numbers instead of 2024 numbers. But there's some good resources online. Yeah. Derek, thank you for getting us started with questions today. We appreciate your participation. For those that have joined us while we were talking here, my name is Nate Payne. This is Will Weatherford. Will is a senior tax advisor here at TaxHive, works primarily on our tax planning team as well as the implementation of some different things, maybe some of which we'll get into today.
Yeah.
For getting questions in, this is Q&A. we don't really have anything planned to get into, but if you've got questions for Will about taxes, go ahead and put those into the Q&A box there in your Zoom. We'll be happy to get to those. Will, let's get another question going here while we wait for some questions to roll in. How about, talk to us about the rolling calendar on the Augusta rule as opposed to the January to January calendar. That one seems to be a question that we get a lot, and it tends to create a little confusion. Talk to us about the rolling calendar. What does that mean? What does that mean for people who are just starting now versus people who started Augusta rule meetings back in January?
So like if we were, yeah, I get that one a lot, so it'd be my pleasure to go over it. So the rolling calendar, effectively, we've got 14 days in the Augusta rule. The IRS stipulates that it's within a rolling year, which means that if we were to start today, we would have 14 days from a year and a day. So we wouldn't be able to go over that total 14-day threshold.
Let's pause real fast.
Sure.
So Section 280A, what we call the Augusta rule, says that you can have 14 days of rental income at your home residence, your primary residence,
Right.
per rolling year.
Right.
Right? And the strategy that we utilize is then renting your home or your primary residence to your business.
Correct.
For those 14 days, so that your business pays you personally for the use of your home. So that's what we're talking about.
Right, and I mean, usually when we're discussing it as a strategy, we talk about 12, and that's for two purposes. It's one, it's consistent, it's clean, it looks reasonable because we're doing monthly meetings. The other is that we are absolutely avoiding exceeding that rolling year limitation. You know, it is possible to do 13. You still have that 1 day buffer to protect yourself. It's important to make sure that we always stay under that 14 day. And the way the IRS will look at it is if there is any segment of the year that they can kind of encapsulate and look at, and you've exceeded that 14 day, you're disqualified. All that income is taxable at that point. So we want to make sure that it's consistently spaced out, that there's not any period that they could kind of cordon off and look at, and there's 15 days or 16 days. We want, that's why we talk about the 12 days.
So where this comes up is somebody's getting started with tax Hive in August. They want to try to get all 12 of their meetings or all 14 of their meetings in from August to December, and then they want to be able to use it again next year.
Right.
We talk about this revolving calendar, this rolling calendar, as a way of helping them space it out. You could, in theory, use all 14 days between August and December, but that also means you can't have any meetings next year until the same time period.
Correct. And that would get pretty old really quick for most people, I think. They're kind of shoving 14 days into the last 5 months of the year. So it's best to kind of do that math, see how many that we could realistically do in that scenario where it's August, and figure out for next year how many can we, if we're going to shift to a monthly platform, monthly format, how many can we realistically get away with the rest of this year, so that come next year we can do monthly and still look back and not exceed that 14 days. We can, but I guess simply put, we try to want to keep it once a month, just for consistency's sake, and so that we don't risk overlapping and having that catch of 14 days exceeded. And that's why if we've got the ability, like we were talking about earlier, to go back, if you've already got the setup for the Augusta rule, and we've already got some meetings that may not have been kind of formulated to be set up as a documented meeting, but it did happen, we can go back and prepare that documentation just to make sure that we've not exceeded that.
You said a couple of things in there I just want to highlight. First, best practice is spacing these board meetings out monthly.
Right.
One a month will help you stay pretty clean. Second thing you said in there was talking about the documentation, making sure it's documented. what is best practice for documentation? I know the answer to this. I'm trying to get us started here. What's best practice for documenting your rental of your primary residence for the Augusta Road Strike?
All right, so one of the biggest things is obviously documenting that the meeting took place. That's going to be in any scenario that the IRS questions it. They want to see that it actually happened. So having meeting minutes that support when it happened, who was there, where it took place, and what was discussed. That's our meeting minutes. You want to make sure that for whatever format the meeting takes place, whether it's financial planning, business development, board meetings, that you've got something like that set up that documents that the meeting actually took place. So that's kind of your principal form of documentation. Then we want some additional supports. One is just a legal agreement between you as the homeowner and the business itself that you're renting to. Of course, you own that, so your name's really going to be on there twice. But we want some kind of lease arrangement that shows also when the lease is going to take place or the rental take place, what the rental price is, when it took place, and maybe some amenities. We have a template available for that, of course, to help facilitate that and simplify it for you. And the last thing is, and this is really just a safety to make sure that there's no issue, is a valuation. The IRS has made it clear that they think that we should pay a reasonable rate, and so we can't get away, charging $1,000 a day or $500 a day. I'm sorry, $5,000 a day for a rental, because we generally try to do about $1,000.
Yeah, I was going to say $1,000 a day usually fits within that range.
I think I'm in $1,000 an hour.
If you were renting a boardroom from a local hotel, you're typically going to pay north of $1,000 for a day.
Right.
You mean don't do anything crazy like try to pay yourself $10 grand a day.
Yeah.
That does come across like you're
We've definitely seen that cross the ire of the IRS, and surprisingly enough, they still didn't disallow the full amount. They just kicked back a portion of it, but we want to avoid any conflict with the IRS and try to stay within that reasonable margin. So we talk about using some comp websites. We talk a lot about peerspace.com, using that as a quick and easy, reliable support. We talk about calling up some rental spaces in your area, hotels like you had mentioned, maybe some rental work sites. Get some prices from that, and that's what we use to justify what you would charge hourly. And then that's kind of your locking or your final piece of documentation, because now you've got documentation to support your rental price, that supports your lease agreement, which supports your board meeting minutes. I mean, there's some additional things that we talk about in our planning where, kind of put a bow or close the loop on your audit trail, which is, I like to say, prepare an invoice yourself personally to your business, because now you've got another piece of documentation that supports this transaction. I never will try to dissuade a client from having more documentation. It just strengthens the argument to the IRS. But at the very least, we like to have those three: that valuation, the lease arrangement, and the meeting minutes.
Thanks. Thank you, Will. We do have a question that came in while we were talking here. Let's get going. Again, for everybody that's joined, and we have had quite a few join while we were going here. If you've got questions for Will, tax related, go ahead and put those into the Q&A box. We'd be happy to answer them for you. This question says, how would you recommend setting up a physical therapy company with 2 clinics owned by 2 50-50 partners? So this one is more about structure, but we can approach it from a tax perspective.
Sure.
They are currently set up as one clinic, set up as an